Welcome back, and this is part 2 of our series on the best mortgage lender in Canada. Today, we're digging into the world of non-bank lenders, those lesser-known companies that are quietly doing some pretty impressive things in the mortgage space. We'll be comparing the top 3 non-bank lenders in Canada to determine which one truly stands out when it comes to interest rates, features, and flexibility. And just to set the stage, in upcoming videos, we're going to take today's winner and put them head-to-head against Scotiabank, our top pick from the Big 5 banks. Make sure you don't miss that matchup. It's going to be a heavyweight battle. But before we dive in, let's start with a bit of context. Non-bank lenders, sometimes called monoline lenders, don't have branches on every corner or flashy ads during hockey games. That means they can rely on their name and recognition to earn your business. Instead, they have to win you over with better products, smarter features, and often sharper rate. And in fact, it's working. Today, non-bank lenders make up 35 to 40% of Canadian mortgage market. That's a big slice. They primarily serve prime borrowers, meaning good credit, stable income, and often through mortgage brokers who negotiate on your behalf. So not only are you getting a potentially better product, but you got someone in your corner helping you secure it. Here's what really makes them stand out: lower prepayment penalties compared to the big banks. If you ever break your mortgage, and the stats show that 60% of Canadians do, you're likely to pay less than non-bank lenders. More repayment flexibility, things like lump sum prepayments and payment increases that can help you pay off your mortgage faster. No cross-selling pressure. These lenders do mortgages. That's it. They're not bundling credit cards, investment accounts, and insurance product. Their focus is laser sharp. Added perks, some offer things like home warranty, which cover appliances and system breakdowns. That's not something you typically get with traditional banks. And don't worry, these lenders are regulated just like the banks. Your mortgage is still insured and protected by federal rules. So let's break down the top 3. Merix, MCAP, and First National. First, Merix, which is owned by Paradigm Quest. You might not have heard of them directly, but they actually power a lot of the white label mortgage products that brokers often sell across the country. That means their footprint is bigger than it looks. Merix made waves in the industry by introducing trailer fees to brokers, a move that helped them ensure brokers stay committed to their clients over the long haul. That's good news for you, the borrower. What we like, they treat clients well at renewal, often offering their best rates without requiring you to reapply. Their prepayment options, they allow you 20% lump sum payments and 20% payment increases. Though keep in mind, those two combined exceed 20% of the original mortgage balance every single year. Solid lender, great for long-term relationships, but not most flexible if you're planning on aggressively paying down your mortgage. Next up, let's talk MCAP, one of the largest and most established non-bank lenders in Canada. They also operate RMG, another popular brand, and the one we just talked about, Merix. MCAP is often rate focused. They're known for pushing low rate products and being early adopters of trends that other lenders eventually follow. Key features: 20% lump sum plus 20% increase annually. Unlike Merix, you can actually combine them. A wide variety of mortgage products, including no frills option, cashback mortgages, and even lines of credit attached to your mortgage. One thing to watch out for with MCAP is their no frills mortgage. Lower rate, but fewer features. Make sure you know what you're giving up. But overall, MCAP gives you a lot of flexibility and often very competitive pricing. That's why they're the favorite amongst mortgage brokers. And finally, First National. This is our top pick in the non-bank space, and here's why. Prepayment flexibility is strong. 15% lump sum and 15% payment increases, and the double up payment feature, which lets you double your regular mortgage payment anytime, as often as you want. And that is huge if you're serious about crushing your mortgage early. This kind of flexibility can take years off your amortization. Beyond that, fast underwriting, especially in regions like Alberta and Ontario, where they're known for quick, common sense approvals. Excellent client service, something that really shows up during the renewal and refinances. They're a leader in tech with easy to use borrower portals and clear documentation. In short, First National checks every box, and many of our clients who go with them stay with them. So let's recap. Merix, great renewal process, strong broker relations, relationship, solid but slightly limited prepayment options. MCAP, trendsetter, great flexibility, lots of product variety. First National, elite flexibility, excellent underwriting, top tier borrower experience. Our pick, First National takes it. But remember, what's best for you depends on your goals and how aggressively you want to pay down your mortgage and how much flexibility you want to build in. In our next video, we'll put First National up against Scotiabank, the strongest bank mortgage lender we've reviewed. We'll compare features like flexibility and long-term value to help make the most informed decision possible. So if you haven't already, please subscribe, hit the notification bell, and give this video a like. And if you're in the market for a mortgage and thinking about switching lenders, don't hesitate to reach out. I'd be happy to help you figure out the best move for your situation. Thanks for watching, and we'll see you in the next video.